The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hi, I'm Esther Gulius, the tax lady. And even though the bills are playing, I was just telling everybody this morning, this might be the most important radio show we do because we're going to give you the lowdown on all the tax changes. And I'm going to tell you something. As we have unpeeled this onion, we found out that the truth is people could, if they do their returns incorrectly this year, it could cost them not thousands, but tens of thousands of dollars. So you want to make sure that you listen to this whole broadcast because I think you're going to find out to be really interesting, even though the bills are playing. So I'm joined in studio with Chris Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher and Tiffany Fabian.
Hey there. Happy Saturday.
Happy Saturday to you. Okay, let's talk about the first thing we want to do because we're going to first explain all the changes, okay?
Yeah.
And actually, there's probably more changes than we're talking about here because some of the changes are more subtle, and they might only change it by maybe $100. But these big changes we're talking about are ginormous, and you want to make sure that this year more than ever, wouldn't you say you should never do let your kids do their own tax return?
Amen.
Oh,
Hallelujah.
no, they definitely bring your kid stuff with you when you get your taxes done.
Right, and you're going to see why as we unpeel this onion. Okay, so we're first going to talk about the changes, and we're going to give you examples, and it's the examples that are going to make you go, oh, my God. Okay, so first of all, wages are pretty much stayed the same. They're, filing status has stayed the same. Wages are still the same. However, this year, you can put money into an IRA regardless of your age.
Yeah, as long as you have earned income, like you alluded to. That's right.
Right.
Yeah.
You can be 80 years old and
still working.
And still working
well,
and still contribute.
Yeah, look at our president is older. Nancy Pelosi is older. I mean,
everybody's
people
older.
Are working
except
longer.
I'm getting younger.
Yes.
So,
people are working longer.
Like,
and so
like
this makes sense.
my mom is 85 and is still working.
older.
And
I hope your mom's not listening. Nobody wants their age told on the radio. Anyway,
Right.
So, and you can also do a spousal IRA. So let's say you got a part-time job as a greeter at Walmart and your spouse is not working, but you guys are thinking we'd like to take money out of our IRA, and so you're taking advantage of all those large standard deductions, and you really would like your wages not to be taxable. You can put up to $7,000 in his IRA, up to $7,000 in her IRA. As long as it's under 14, you're good to go.
That's called a spousal IRA.
Right.
And you're drawing off the wages of the other spouse if only one of you are working.
right. And you're going, why would somebody do that if they have to take out their minimum distribution? Well, the thing is, if they're working and say they make $10,000, a married couple, well, that $10,000 could impact their taxability of their Social Security,
exactly
make their
right.
Social Security tax. So now they can put that $10,000 away in their IRA, and then that reduces the taxability of Social Security. So that's one benefit. The other benefit is they could reduce their income. So when Irma gets impacted,
Well, Irma is a big thing.
yeah.
I never did like Irma. Do you like
No,
Irma?
Aunt Irma's
So
never
explain
been.
what Irma is. Oh, and by the way,
Aunt Betty
we're
Crocker's
not
always
taking
good.
calls today
I was thinking
because
that.
we really have to unpack this puppy. So we'll be back on the air next Saturday with your calls, or you can call anytime during the week at our corporate headquarters at 632-7886. Okay, so let's explain what Irma is.
Irma is the cost of your Medicare through your Social Security. So
When your wages go up,
as your income goes up, your Medicare goes up. So you want to try to do anything in your power to keep your income under, because there's people who are paying, instead of the $144 a month, they're paying $250 a month, up to like $450, $500 a month for Medicare.
What's interesting now, I just got an email this morning from a taxpayer who said last year in 2019, I had to do remodeling, and I took a lot of money out of my IRA. So I'm going to end up owing those taxes this year. But on top of everything, they're penalizing me on my Medicare. And I said, well, good news, because, and I didn't get my stimulus, so he must have made over 75. I said, well, good news is we can get you your stimulus back. That's something I'm talking about a little later. We can get you the stimulus back that you didn't get, and we can get your IRMA lowered.
Right.
So come in and we'll help you. And so that's something that EG Tax can do.
Yep.
All right.
Definitely.
By the way, our office is open on the 18th for those of you early birds that need to get everything together. But I will tell you, if you are on unemployment, you have to go to the New York State website to get your unemployment statement. For you to file without that unemployment on the tax return means you are going to hold up your refund, and you don't want to do that. So in a hurry to get that, whatever you think you're getting, you want to make sure you get your unemployment statement from New York State, or else you're going to mess up your tax return, and then you're going to be very sad. And as a matter of fact, we have the QR code for that on our desk.
They
right?
just click it, load their pictures on their cell phone, and it'll bring you right to the website. So with that being said, if you're struggling with printing it or you don't have a printer at home, just go into one of our offices and we can go to the site for you
and help you.
And help
but
you
you
print
can't
it.
file without it.
We can do it all safe and secure
just
without having to
Okay, I'm Esther
touch your
Gilius,
phone.
the tax lady from EG Tax. We're not taking your calls. We're just talking taxes. Yay, bills, go bills, and we're giving you the tax law changes, how they affect you. Then some examples, and I'm going to tell you it'll blow your mind. And I will tell you, you make a mess this year of your taxes. It's not like you're going to mess up by $100. Some of you're going to find out you're going to mess up like $12,000, $13,000. So you want to pay close attention, right?
Never before
Okay,
have I seen
unearned income. All right. There isn't a big change on unearned income except in the area of your children and kiddie tax, because kiddie tax is a fixed.
Right, and like I said to our staff, they really need to change the name of kiddie tax.
Yeah, that's true,
because
that's
you
a
think of a
dependent
little
tax.
kid. It's your child
Or
tax.
dependent. Right, it's a dependent tax,
Yeah.
right?
If you're claiming somebody under the age of 24 on your return, and they have unearned income, they could be subject to kiddie tax, which means they're going to pay at the parent's tax rate.
As opposed to their own.
Correct.
Right. And so instead of them getting their large standard deduction and everything, that all is eliminated, and they have to pay taxes at the parent's rate. Now, this is really important because unemployment is considered under an income.
Correct.
Right.
So that means your kids that might have been getting a lot of money on unemployment this year, you think you can claim them on your tax return. If you claim them, the kids then have to pay taxes at the higher rate, number one. Number two, that's going to mess up their stimulus.
And
we're going to talk about how to get that stimulus money that they didn't get.
25 years, hardly any kids have ever gotten unemployment. This year has been an oddity.
Because it was pandemic,
Yep,
right?
yep.
And so unearned income, kiddie tax, that's a big change. Number three, self-employment tax. Those of you that are self-employed know you pay your own FICA, which is 15.3%. Mm-hmm. One of the changes this year is that you can make an election to defer the the Medicare portion of the the FICA portion of the FICA, the 12.4% or whatever. Yeah, it's 12.4.
Right. The employee side is
Right.
6.2. The employer side is 6.2.
So the 6.2%, you can wait to defer that until December of 21 and then December of 22. So if you're an over-the-road trucker and you're going to be paying $6,200 on your share of the FICA, just think about that. You could defer it until next year and the year after. That's a ginormous savings. But again, you have to know to take the election, and you save yourself paying that, and it's without penalty. So I'm Esther Gilius, the tax lady from EG Tax. We're talking tax law changes. We got a bunch of them coming. We're going to break for our sponsors, and we'll be right back on the other side. Hi, this is Esther Gilius, the tax lady from EG Tax. Don't forget, we have 32 area offices here to serve you. We can do your tax return in person, and we are COVID'd through the place. We're all cleaned up. We got masks. Everybody's got shields. We're good to go. Or you can use us virtually. You can sit home and do it on your laptop at home, and we will do the complete interview. You don't have to worry about paying extra for professional
you can
help.
drop it off, and we'll come right out to your
car. Or you can drop
car.
it off, and we'll run it out to your car. I mean, there are a myriad of ways we will get you going, though. That's the important thing. And if you have questions, you can go to our website at egtax.com, ask the tax lady, and we'll answer them at no charge. We certainly want to help you. Don't listen to your neighbors. If you've seen our commercial, don't listen to your neighbors. You got to ask the wise old tax lady at EG Tax, because we want to help you. So we're talking first. We're not taking phone calls today. Go Bills. We're talking first about the changes, then we're going to show you how the changes affect your tax return. And I'm going to tell you, a mistake this year couldn't cost you hundreds. It could cost you tens of thousands of dollars. That's how ginormous these changes are. Right?
Definitely.
And of course, Chris Fabian, Tiffany Fabian. All right, let's go back. So the FICA can be deferred. Other thing, pension plans. Other changes in pension plans.
You could have taken out up to $100,000 out of your pension or IRA if it was COVID related, and you didn't have to pay the 10% penalty if you're under the age of 59 and a half. And also, if you wanted to, you can pay it back and defer that for 3 years. Well, you have 3 years to pay it back.
Right. So you either pay it back evenly over 3 years, right?
Yep.
So if you took out 100, you'd be 33, 33, 33. In year 1, 33, 33, 33. Year 2, 33, 33, 33. In year 3. But as long as you pay it back all by the end of 3 years, you can amend and get that money back. There's no penalty as long as it's paid back within 3 years. So that's pretty remarkable. Think about it, a 3-year loan on your money that would have been taxable.
Right. And normally they only give you 60 days.
That's right.
So here you have 1,000 days.
So again, another catastrophic change to the tax code. All right?
Yep.
Have you ever?
No, the whole thing blows my mind. You know. Okay, now let's go to stimulus money. This is everybody's interested in this, and everybody knows right now it's $600 per family member, right?
Correct.
Of what was claimed on your 2019 return. But wait, that is not necessarily the
that
case.
600 was stimulus too. The first stimulus was 1,200 per adult and 500 for child.
So based upon what you received for 2020, you would think that takes care of it. I got my $1,200 per person, $500 for kids under the age of 17. But what they did was they said, well, we don't think that could be fair, because in 2020, you might have lost your job, you might have had no income, and so in 2019, when we based the stimulus off of, you might have been high and mighty, and so you didn't get much stimulus money. So we're going to give you another shot at getting that $1,200 and $500 back again, right?
That is so cool.
Right.
All right. And
Which makes a lot of sense. It's very logical.
So there is something called a recovery rebate credit that's on the tax return for 2020. And so basically you have the option of putting in there how much you got for your stimulus in 2020, the $1,200 and the $500 in your family, and they say that's what you got. But based upon this year's return, the 2020, how much would you have gotten?
Versus the 2019.
When they compare it against 2019, and you might be entitled to, maybe you had a new baby last year. Maybe your income was so high that you didn't get any of the stimulus money, and this year your income's lower. You might find that you didn't get $2,400 that you're entitled to, and boom, you get it on this year's return by doing the recovery rebate.
That is so cool. But it could be so easily missed. What were you going to say, Chris?
I was going to say there's so many loopholes involved in this too, where
there is a big loophole.
Right. One is we were talking about your college child.
Right.
You may not want to claim your college child this year, and this is why we say bring in your child stuff with you so we can get the best answer for your tax return, because your child could be entitled to the stimulus right now, that $1,200,
like your child,
like my child, then eventually get the $600 stimulus
and anything else coming
and
down
then if they do another stimulus, they would get that.
Yep.
You got her so excited, but I got to tell you, I'm going to keep that money. Oh, she's so excited about that.
She doesn't save it anyway.
Cap on that.
So let's put it into simple terms. Let's just say let's first do the child, the college kid. So last year let's say you claimed your college-aged child, who was over the age of 17, so they got no stimulus. You got, for let's say on a joint return, there was only the two of you and your child. So you and your wife got $2,400.
Correct.
Okay? But this year you take a look at it and you say, well, if Lucy, let's say her name is Lucy, files her own return, then we're not going to get the whole $2,500 credit, but Lucy would get $1,000 of it. And Lucy will then qualify for the $1,200 stimulus that she didn't get. So now we're up to $2,200. Lucy will also get the $600 that she didn't get for this year. So now we're up to
18.
No, we were at 1,000, 12, 22, 2,800 now. So, and if there's any other stimulus money coming down the pike, which may be 2,000, it might be 3,800. So you have to look at it that way. And then you have to compare it against what the parents would save. The parents would save $500 plus the education credits. So if the parents are at 3,000, Lucy's at 28. Well, you might say, okay, then let's claim Lucy on our tax return. But if there's any more stimulus money coming, that would not be the case.
Not to mention the fact that Lucy, if she filed her own return, she might be subject to kitty tax, which would be like gulp.
If she had unemployment.
Yep.
If she had unemployment and was claimed by mom and dad.
Right.
So, yeah.
So
but you can remedy it.
So it becomes really a conundrum. Some cases are more clear cut. Like for instance, let's say Lucy made $12,000 on unemployment, of which she'd have to pay kitty tax if mom and dad claimed her. So she might have to pay $1,200 in taxes on that money. So in her case, it'd be better to let mom and dad go and not claim her. She'd get the $1,200 stimulus that she didn't get. The kitty tax would then become a moot point. She wouldn't have to pay that. And she would get a $1,000 credit for New York State plus the $600 plus any new stimulus coming down the pike.
That's right.
Right?
That's right.
Yep.
There's
Okay.
a way. You've really got to look at it every which way.
All right. Then the other thing is, yes, you know, Chris. All right. Then the other thing. So looking at the stimulus again. No, not the stimulus.
Looking at the stimulus.
Yeah.
If
the
the
non-custodial parent. Yeah.
The custodial, non-custodial parent, where if you switch, you have two children, and 1 year the custodial claims the two children, the next year the non-custodial claims the two children. So here on the 2019 return, we'll say the custodial parent claimed the children. They received the $500 per child. Now on the 2020 return, the non-custodial claims those same two children
And gets an additional
and will get
$1,200.
the extra $500 per child
Right.
on the return.
Right.
So then you're looking, that child got two stimuluses.
Right.
I mean,
and
that's
they may end up with an extra 600 because of that. So then you figure that in 19, let's say mom had the children and herself, and so she got $1,000, $500 apiece. This year, dad's got them. He goes back and does a recovery credit rebate.
Yeah.
Right. He gets them again.
Right. And then he'll get the $600 now. And then next year, there's probably going to be this reconciliation
Then he'll
again.
get it again.
So mom then
Gets
will
it
get
again.
the same money that dad. So it's unbelievable.
I mean, it's thousands of dollars in errors that you can make. Okay. Now, moving on from there. Now, looking at this whole COVID situation, they were trying to make it so that if you were somebody that had a child living in your home, or if you were a lower income wage earner, that the earned income credit, because you're working, is a benefit that the federal government gives you for working, having lower income, and having children, or not working and having very low income.
Correct.
Well, in 2020, you may not have gotten the earned income credit because because you had very little earned income or no earned income at all, because you went right onto unemployment. Unemployment is not earned income, and unemployment is taxable.
Correct.
So if you take a look at the 2020 tax return and you say, gee, I got $40,000 between my wife and I in unemployment, and we have two kids, how much are we going to get in earned income credit? Nothing.
Nothing. Zero. Right.
Nothing. You get nothing.
Right.
But
Exactly.
if you look at the recovery rebate, actually, you look at the earned income worksheet, excuse me, they give you the right to go back to 2019 the way it used to be, how much it was originally. And you can either use the 2019 wages or 2020, whichever is better for you.
That's right.
So if in this couple's place, they had made $20,000 working in 2019, they get to use that for their earned income, and they'll get like a $4,000 or $5,000 refund on money they didn't know that they had.
Yep, and that's so important to get the word out. It's so important to tell people.
You have to tell people.
Gosh.
Your kids, I mean, you can't assume it's business as usual, because I'm going to tell you it is not.
Right. And the earned income credit, I know we're coming up to the news. The earned income credit, the max with 3 children is $6,660 this year. So if you had all unemployment, like you said in your example, you get no earned income credit. Use your 2019, you have the 3 children. That's $6,660 on the
plus
federal.
Plus the state of New York.
Plus the state of New York, which is like 20% of the federal. So then you're looking another
almost $8,000 total.
In earned income credit.
Thousands of dollars. This is really, really, really important.
And
so,
sorry, on the other side of the news,
we're going to
talk
tell you
about
more.
how this change will also impact another
you just can't
credit.
believe it. Don't forget, if you need the best tax help, you can go to egtax.com, any one of our 32 offices. We're going to take a short break. Go Bills. We're going to make a short break and be back on the other side. Hi, I'm Esther Gulias, the tax lady from EG Tax. We know that maybe you're listening to the Bills game, but you should really be listening to this because we're giving you unbelievable information. I'm going to tell you with the changes in the tax law that just took place over the years to help people with stimulus, they were unbelievable, but the ones that happened 5 days before the end of tax season are astronomically good for people. So we were talking about the earned income credit just before the news, about how if you have children living in your home and you had no earned income because of unemployment, there's a remedy for that. You would use the option of basing your tax liability, not your tax, your earned income credit on the 2019 wages.
That's right.
Right?
Yep.
All right. Now, not only do you get the earned income credit when you have wages, what else do you have when you have children under the age of 17?
The child tax credit.
Which is like almost $2,000, or it can be $2,000 per child.
Yep, that was part of the Trump reform. It went from $1,000 to $2,000, which is whoosh.
So, and it's refundable.
That's right.
So not only if you were on unemployment this year would you have not gotten the earned income credit, you also would have not gotten the child tax credit. But using this option of going back on the earned income worksheet back to 2019, now you also get the additional child tax credit.
Isn't it? You just see dollar signs, and I know that makes you so excited for your clients, which is great.
What that means is, we already said it's about $8,000 between federal and state for the earned income credit. Now add this child tax credit in for the federal and New York State.
That's right.
Okay, you're looking $6,000 for the federal, $990 for the state. So that's another $7,000. $7,000 plus that $8,000. There's $15,000 for one person.
Yep.
Oh my gosh.
And that's why if you make a mistake, it's a travesty.
Yeah.
It's a travesty.
My gosh. If you look in the stimulus package, how much they gave to foreign aid, you want to make sure that you as an American citizen take advantage of everything in front of you.
So you want to make sure that you take a look at here's the interesting thing as well. Let's say that you don't qualify for the earned income credit. So you say, "Oh well, I don't need to pay attention to the tax lady." Oh, yes you do. Because let's say last year in 2020, you and your spouse mostly lived on unemployment. So you don't have any or much in wages. The child tax credit is based upon your wages. So let's say the year before you made $80,000 and you say, "Well, see, I wouldn't get the earned income credit." No, but using that same election on that earned income credit worksheet, it then validates the wages that you used to get in 2019, and you'll get the additional child tax credit on that.
Yep.
So if you had 3 kids, you just went from maybe owing money to getting a $6,000 refund and a New York State $990.
Right.
I mean, holy moly.
It's unbelievable.
It's almost $7,000 mistake.
Yeah. I mean,
okay.
I know when
I'm
we did
calming down.
I know when we did our training during the week, our staff was like, yeah, okay. But then when we physically showed them on the tax return, their jaws hit the ground.
I'm telling you.
Because until you see it, you don't believe it. They were like doubting Thomas.
Absolutely. I don't think you were ever going to go home this tax season. It's going to be very complicated. I mean,
well, it's going
to be very complicated.
Because not only do you have to know the tax law, you have to be able to interpret which of the taxpayers sitting in front of you are going to benefit better and by how much.
Correct. That's right.
So, okay. Again, I'm Esther Gullius, the tax lady with Chris Fabian, Tiffany Fabian. If you need the best tax help, EG Tax is there for you. Hey, look, we're not perfect, but we sure try to be. And if there's anything that you have a question of, we will research it and get you the best answer.
Right. And one thing I got to say about children, too, with the college children getting unemployment, some of them could have got $18,000 in unemployment this year. Okay. One of the dependency tests is support.
Right.
The parents have to prove they supported their children. And most children, we know, we've had them.
Well, that's because of your children.
Spend the money.
Right.
Right? If they got that money, those Amazon trucks coming down your road every day, it's probably because of your children spending their unemployment money.
He is number 2 wealthiest man in the world.
Right.
Bezos, yeah.
Yep.
Bezos.
So you would have to, as a parent, prove you spent more than $18,000 on your child.
More than what the kids got.
More than what the kid. So a lot of parents aren't going to be able to come up with that proof, because first of all, if they're only making $50,000 a year, and they have 3 kids in their house, it's going to be.
Or they could have bought a car too.
Right.
That would be another exception.
That could be if they bought a car for their child.
But mostly the kids say, "Mom and Dad, would you buy me a car?"
Yeah. But you got to look at it, and most people didn't save their Wegmans receipts, their Tops receipts for the year. How are they going to prove how much money they spent on
especially
food?
when you're locked down for the year. There's nothing much you can spend.
Toilet paper.
Yeah.
But that support test. It's got to be looked at. And unfortunately...
And so what you're saying is you cannot just carte blanche say, oh, well, too bad, Junior.
Right.
We're going to let you blow by all the stimulus stuff. We're claiming you. Number one, it probably isn't going to be in the kid's best interest. But number two,
legally,
they maybe shouldn't legally be claimed.
Yep.
But here's the other thing. Let's say Mom and Dad say... Okay, Junior, you're going to get the $1,200 stimulus and the $600, which is $18, and you're going to do $1,000 on the refundable education credit. So that's $2,800. Let's say Mom and Dad say, well, we don't really think that's fair because we've been supporting them. There's nothing that would preclude Junior from saying to Mom and Dad, I would really like most of this money. How about if I give you $1,000 and you could deposit that refund of $1,000 into Mom and Dad's checking account, and then there's no consternation when that money comes in, where you have to chase Junior around the house.
8888, and it's an allocation of refund. You can put it in more than one account.
Right.
You mean the same thing we used to say to parents about their children when they claim?
It's like completely different now.
Yep.
I mean, when they're giving away free money, you pay attention. Okay. So now that's kind of a broad overview. I mean, there's a whole bunch of other things in the law, but that's the big stuff. But here's other things. For businesses. First of all, if you have a small business and you have employees, pay attention. This is very important. It's called the Employee Retention Credit. You do this on your 941, which is your quarterly employee payment reconciliation form with the IRS. Now, if you had 500 or less employees and you suffered more than a 50% decrease in any quarter last year due to COVID, then you're entitled to a credit of up to 50% of the first $10,000 in wages that you paid that employee. So let's say you had 5 employees and you're hoping like heck to keep things together. You're in a small restaurant, right? And you paid them $10,000. They're going to give you $5,000 times those 5 employees, or $25,000. That's $25,000 in payroll credits on your 941. If you're doing your own payroll and you didn't know how to do this, or if your payroll company didn't ask you if you wanted to do it, you can amend your 941 and you'd get the $25,000 credit.
Yep. And hey, this was all done in hopes of helping small businesses.
Right.
You can drive down the road and you see business
restaurant
closed
owners
and business
or
closed.
small business, nail salons. I mean, hair studios. This is a lot of money. Now let's turn the page. What happened for 2021?
They extended this till July 1st, so now it's 2 quarters in 2021. But what they did was, instead of making it per year the $5,000, they brought the 50% up to 70% of the first $10,000 of wages, but that's per quarter. So now you're looking up to $14,000 credit per employee. So if you have 5 employees, like Esther said, 5 times 14, that would be a $60,000 credit.
Right. In other words, the IRS
70,000.
is $70,000. The IRS is paying you 70% of your wages.
So,
and this is on your 941. You have to fix your 941 to cover this. Think about this. This gives many employers who are holding on by a shoestring, thinking, I can't afford to pay Susie and Johnny and Millie and Bonnie. The federal government's going to pay for it.
Right.
That's
so
right.
think this is how I had to explain it to our staff, because, we're numbers people. You have to see the numbers, right? We're used to 1040s. Again, this is your 941. So the 941, for the people out there listening who don't know, that's where the employer reports saying, we paid $200,000 in wages this year. Out of that $200,000, we owe $20,000 in Social Security tax we withheld from our employees. We have to match that, so that's another $20,000. That's $40,000. Then on their wages, the employees elected to withhold, and I'm just going to use another $20,000 as an example. You're at $60,000
in taxes owed to the IRS
that the employer would have had to write a check to send to the IRS. Well, now you take this credit and say, so now you have a $40,000 credit out there. You have the $60,000 you were supposed to pay. You take that credit of $40,000. You only have to mail the government $20,000 instead of $60,000.
But if you don't fill out the form, then you don't get the credit, and you overpay your taxes.
Right.
And that's what's so scary. Now, you can amend your 941s, but believe me, if you haven't taken advantage of this credit, you got to do it now.
Yep,
okay?
absolutely.
And just think about it this year. As you're making your plans for the new year here, looking at the federal government, if you're going to, now you don't have to have a 50% drop, by the way, under the new law. It's 25% per quarter, and you still qualify. So it's remarkable.
It's what the government's doing for small businesses. You listen to the news and we want more, we want more. They're basically giving them the world.
I mean, they really are.
They're shutting down. Right.
Yeah. I mean, everybody was saying
shutting down
$600. That's all we're getting is $600. Not really. Not really.
No. You look at the tax return. How much more money are these people going to get?
I mean,
you look at the small businesses. I know that businesses can shut down. I know that.
No, what I was saying is restaurants are closed, and so they can't operate.
Right, but like for instance, the other day we brought carry out from Carrabba's.
Right.
Carrabba's still has a staff.
Yeah,
right.
They do.
They've still got employees.
Yeah.
And you don't think they're operating at a 25% or more deficit? I think so. So Carrabba's would be a perfect example. And people don't realize Carrabba's may have a big national name, but they're a local firm because they're a franchise.
Right.
Yep.
They are.
It's hard. And and maybe right now somebody's sitting around thinking, well, I didn't know that they'd pay me, say, 70% of my employees' wages. I can afford to open.
That's right.
Yep.
Yeah.
I can afford to open. So maybe Sammy's Pizza can open again or something. I mean, it's really a great opportunity. And again, the only place that this is found is on the 941.
Yeah.
Right.
And EG Tax does this stuff, so you can call us. I don't have time because we got a break for our advertising break. I'm Esther Gillies, the tax lady from EG Tax. We'll be back on the other side. No questions this week. Questions not next week. Go Bills. I'm Esther Gullius, the tax lady from EG Tax. Hey, thanks for listening. Happy New Year. We're going over the tax changes. We know the bills are playing, and we're praying for the bills, but we hope you're listening because this is really an important show. All right, we're talking all about the tax changes. I got Chris Fabian, Tiffany Fabian, PPP loans. Everybody's heard about PPP loans. These were loans given to small businesses due to the pandemic, and if you use the money anywhere between 1 and 24 months from the time it was issued on payroll and operating expenses, then it was the criteria to have the loan forgiven. But you had to apply for the forgiveness within 10 months after the money was used. So if you've used your money, you have to apply to your bank, which will then forward it to the SBA to have the loan forgiven. If you don't, it's going to stay a loan and you're going to have to pay it back.
That's right.
But if you do, it's a grant.
And then people often get confused. One of my clients came in. They didn't get the PPP loan. They got the small business loan.
The EDI.
Yes. And so he was confused, and I helped him to get untangled.
I mean, if you have a question and you're a small business, call us.
Right. And the thing is, it's not hard to get it forgiven. That's the thing. You just got to take the time.
Right.
You have
since you have time, because you're not really seeing clients,
Right.
Mm-hmm.
You have to provide proof of your payroll. So you get that from your payroll company. That's not hard to do. You send proof of your rent. So if it was us, we'd have to do 25 offices, get all the rent checks. But if you have one spot, how hard is it to print those rent checks for those 5 months?
Right.
Then you get your gas bill, your electric bill, your telephone bill, your internet bill, the canceled checks and the bills. You send it to them, your financial institution, they approve it. It goes to the SBA, then they approve it. So if you got $50,000 and it takes you an hour to get...
You just made $50,000.
You just made $50,000.
Well, actually, you made $100, because the other part of this is the non-tax... Once it's forgiven and it's a grant... The bills that you paid with it are still deductible.
Yep.
So if you got $100,000, that's tax-free, and it paid bills that are tax deductible, it's like you got $200,000 taxable income.
And
it's unbelievable.
At first, the law wasn't written that this was going to be the case. At first, we thought the law was written,
because that's what the IRS said.
Right, that you
because
weren't,
that's normal tax
right,
law.
that you weren't going to be able to take your expenses, and so they just went and adjudicated, fixed, and said now you can also take the expenses, which is amazing. So you're getting the money, and you also get to take the expenses.
This probably will never happen in the rest of my life.
No.
I've never seen
From your
it.
lips to God's ears.
Yeah, that's true. So that's the PPP money. All right, that's a big thing. Now there's a second round coming up.
That's what I was.
But it's for 300 employees or less, and 25% decrease. So, I mean, hello.
I would look into getting it if you're a small business and you're down in income. Look at getting the PPP.
Yep. I don't know how anybody except maybe Amazon, Wegmans, and Tops are up. Who else would be up?
Anything, cleaning companies, manufacturing of
Businesses
hand sanitizers,
essential
businesses in Niagara
hospitals.
County.
Yeah, right.
Yeah.
All right. Then the next thing is charity. You can take 100% of the amount of income that you have, adjusted gross income, as a charitable deduction this year, provided cash contributions. Normally, it's going to be limited to 60%, and this year, if you can itemize, you can take an adjustment of qualified charity that you actually gave up to $300, and next year it'll be up to $600 if you're married filing a joint return.
Which is so wonderful.
Those are like the big things. Now let's do some examples.
Well, yeah. Oh, I was just going to say you could this year and I could. At first, I'm thinking, why did they change this? But then I'm going, well, I bet you charities are hurting for money, right? Because people aren't. But they are making what they did, where you said 60%. You can make a special election to do 100% of your AGI. So what that means is if you had
you had to give it already.
You had to give it.
Right.
But if you had if your AGI was $200,000, you could give $200,000 to charity. So I think they're going after the rich, saying, give more money to charity. We're going to let you deduct it.
Right.
Absolutely.
So these charities, which are hurting, hopefully got some extra money.
Right. I mean, I have to tell you, if they would make giving to the federal government tax deductible, I bet you a lot of people would give not income taxes, but charitable money to the federal government, which is almost a charity case right now because they're printing money that we don't have. Right?
Yep, they certainly are.
All right. So here's some examples. Family of 4 with a child in college age 19. They received $2,400 plus $500 for their under 17-year-old child last year with the stimulus. They also received an education credit of approximately $2,500 for their college-age student last year in 2019. This year, the college student received unemployment in the amount of $8,000, is still a full-time student with education costs of $10,000. If the child is claimed by the parents will benefit again by the $2,500, but the child would be subject to kiddie tax of $960. So the net benefit would only be $960 from $25 or $1,540. If, however, the child files their own return, the kiddie tax would not become applicable. The child's refund would then be $1,200, so they're going to get the stimulus money that they didn't get last year, plus the $1,000 AOTC, plus they're going to get another $600 from the stimulus they didn't get, and any other stimulus money coming down the pike. So it's better in this case for the parents to not claim the child, for the kid to get the stimulus and the child tax credit. Everything has to be done individually.
When I'm doing a tax return for a client, I'll actually write it down in black and white so they can see this way as a family and scenario B as a family. And it's black and white and nobody gets confused. I do that for kids, and so you'd want to do it for the parents too.
Right. And remember, this has to be an election. A lot of this has to be elections. All right. So let's say we have a non-custodial parent.
So you don't have to amend any returns, right?
So mom and dad are divorced. Mom's got custody of 3 kids in 2019. She would have received a stimulus payment of $1,200 for herself and $500 for the kids.
Yep.
Right?
That's right.
This year, the dad gets to claim the kids on his tax return, even though they still live with mom. Right?
Right.
When he does the recovery rebate credit, he's got to do that credit. He's going to get the $1,200 that he may not have gotten last year because his income was too high. But if he did get it, he's still going to get the 300 times 3 children, 500 times 3 children, or $1,500. So he's going to get an additional $1,500 plus the possibility of getting
the $600. For the stimulus too.
Right.
So that's another 18.
Too.
So that's $3,300. And then next year, with this reconciliation form, the children go back to the mom's return. She'll get the $600 as well
if they put it back.
If they put it back.
Right. So these are just little examples. All right. Let's say a taxpayer didn't file, nor did they receive any stimulus in 2020 because they didn't think they had to file.
Right.
This year they file a tax return. They get $1,200.
Right.
And they're going to send them the other $6.
Right.
That's
right.
Unbelievable.
All right. Taxpayers had income of $190,000 in 2019. 3 minor children under the age of 17. They received zip last year. Okay? Then they filed their 2020 return, and they find out they were on unemployment for most of the year, and they only had income of $125,000 because they had some wages and unemployment. When they fill out the recovery rebate form, they're going to get the $1,200 times 2, or $2,400, plus $500 times 3, or $1,500, or $3,900 in credits. Plus, they become eligible for the $600 times 5 stimulus, or 3. So they're going to get $6,900 back.
Yikes!
Right?
Don't mess that up.
I mean, these are concrete examples. These are not far-fetched either. All right, now, earned income credit is still can be based on 2019 earned income rather than the 2020 if the difference is beneficial. For example, a taxpayer with 3 children in 2019 had earned income of $17,000, but in 2020 had no earned income due to unemployment of $20,000. So even though they made more money, right?
Right.
They don't qualify for the earned income credit. But if this new option wouldn't be available, they would have got no earned income credit but paid 0 in taxes.
Right.
But by making the option of using the 2019 wages, then they get to base the earned income credit on 2019, and they get an earned income credit of $86.89 plus another 20% of $1,700 in New York State, so that's $10,000. Plus, they'll get the additional child tax credit on 6 kids of another 6. Plus the state of New York. So it's a ginormous refund.
Yep.
Thousands and thousands and thousands of dollars.
Huge.
All right.
That was the earned income. Oh, my gosh. The earned income credit is just staggering. And then in a minute, you're going to talk about the child tax credit that goes along with it.
And again, the child, in this same situation where they had no earned income because they were on unemployment, but last year they had earned income credit of $50,000. They're going to get an earned income credit, a refundable child tax credit,
maybe an
on the state
additional.
of New York, an earned income credit, and the Empire State credit. I mean, holy moly! All right. Employers and self-employed, again, employers who kept staff on, who had more than 50% reduction in the first 4 quarters, any of the first 4 quarters of 2019, could get a credit, like we talked about, of 5% of the first $10,000 in wages. So, and then this year it's going to be 70% of the first two quarters, up to $14,000. So if you're if you have employees, make sure that you go to the 940 and make sure that was done for you. And I know I'm running out of time. I have so
But
much
you're
to
so
say.
excited.
And I'm so happy because we want to help taxpayers. And when you're ready to file, give EG Tax a call. Remember, we can do it virtually. We can do it in person, all masked up, or you can drop off your information
You can
during
deposit in the portal.
Right. Oh, and then you can go to our what do you call that thing?
Website.
Our app, and you can download the EG Tax app and set up a portal and send us all your information. We can start your tax return right away. Until next week, I'm Esther Gulius with Tiffany Fabian, Christopher Fabian. Have a great week. Thank you for listening. Happy New Year. God bless you. Bye-bye.